Have you ever wondered if your money is truly safe in the bank? It's an intriguing question, isn't it? Most of us are brought up to believe that banks are the safest place to keep our hard-earned money. We tend to trust them because they're big, they're regulated, and they've been around for what seems like forever. But what if I told you that this might not always be the case? What if the safety of your money in the bank was more akin to a beautifully spun illusion, rather than a concrete reality? Consider this. Banks, like any other business, can fail. And when they do, the impact can be devastating. While it's true that many countries guarantee a certain amount of your bank deposits, there's often a cap on this guarantee. So if your savings exceed this limit and your bank goes under, you could stand to lose a substantial amount of your money. And let's not forget about inflation. It's the silent thief that chips away at your money's purchasing power over time. With most bank savings accounts offering interest rates that are lower than the rate of inflation, your money could actually be losing value the longer it sits in the bank. Then, there's the matter of low interest rates. Banks are notorious for providing minimal returns on savings. Sure, your money is safe from theft or loss, but is it growing? Is it working for you? Or is it just sitting there gathering dust while the bank uses it to generate profits for themselves? So, you see, the safety of your money in the bank isn't as black and white as we're often led to believe. There are risks, there are downsides, and there are alternatives that could potentially offer a better bang for your buck. You might be surprised to learn that your money might not be as safe as you think. But don't worry, we're going to delve deeper into this topic in the upcoming scenes, so stay tuned. Banks are not the golden geese they are often perceived to be. We've all heard the old adage, save for a rainy day, and where better to store those savings than in a bank, right? Well, not quite. Let's dive into the reality of bank savings. When you park your money in a bank, you're essentially lending it to the bank. In return, the bank pays you interest on your savings. But the interest rates offered by most banks these days are shockingly low, often less than 1% per annum. It's like waiting for a tree to grow in the desert. Now let's add inflation into the mix. Inflation is the rate at which the general level of prices for goods and services is rising. Essentially, as inflation rises, every dollar you have buys a smaller percentage of a good or service. If the inflation rate is higher than the interest rate you're getting on your savings, you're losing purchasing power. Your money is worth less and less over time. Think of it this way. Imagine you've saved $100 in your bank account. At the end of the year, with an interest rate of 1%, you'll have $101. Sounds good, right? But if inflation for that year is 2%, the purchasing power of your $101 is actually less than what you started with. It's like taking one step forward and two steps back. So, your money isn't growing in real terms. In fact, it's shrinking. And that's not even considering the fees that some banks charge for maintaining your account. So, while your money is safe from theft or loss in a bank, it's not safe from the erosive effects of inflation and low interest rates. So, if banks are not the best place for your money, where should you put it? Well, that's a question for our next scene. Stay tuned. There's a world of investment options out there waiting for you to explore. So let's dive right in, shall we? First, let's talk about stocks. When you buy a company's stock, you're essentially buying a tiny piece of that company. If the company does well, so does your investment. But remember, the reverse is also true. Stocks can be a bit of a roller coaster ride, but they have the potential for significant returns over the long term. Next up, we have bonds. Think of bonds as loans that you give to a company or a government. In return, they promise to pay you back with interest. Bonds are often seen as safer than stocks, but the potential returns are usually lower. Now let's move on to mutual funds. These are investment vehicles that pool money from many investors to buy a diversified portfolio of stocks, bonds, or other assets. They're managed by professionals and can be a great way to spread your risk. Real estate is another popular investment option. Whether it's rental properties, commercial real estate, or flipping houses, this tangible asset can provide steady income and potential appreciation. But remember, it requires more hands-on management than some other investments. Finally, there's the world of cryptocurrencies. These digital assets have exploded in popularity in recent years. They can be volatile, but they also offer the potential for astronomical returns. However, they are also highly speculative and not for the faint of heart. Each of these options has its own risks and rewards, but they all offer potentially higher returns than a simple bank savings account. So, why not step out of your comfort zone and explore the exciting world of investing? After all, it's your money. Shouldn't it be working as hard as you do? Choosing the right investment option depends on your personal circumstances and risk tolerance. And that's the crux of it, isn't it? You see, investing isn't a one-size-fits-all equation. It's a deeply personal journey that hinges on understanding yourself, your goals, and your comfort with risk. So let's start with the basics: your financial goals. Are you saving for a dream vacation to the Maldives, or are you building a nest egg for your golden years? Your goals will influence the type of investments you make. Short-term goals may call for safer, less volatile options, while long-term goals can afford to take on a bit more risk for the potential of greater returns. Next, we need to talk about risk tolerance. This is about how much financial uncertainty you can stomach. If the thought of your investment value fluctuating makes you break out in a cold sweat, you may have a low risk tolerance. On the other hand, if you're comfortable with the possibility of losing some or even all of your initial investment in exchange for potential higher returns, you might have a high risk tolerance. And then, we have time horizon. This is about how long you can afford to leave your money invested before you need it back. Longer time horizons typically allow for more potential growth and the ability to weather market fluctuations. Finally, let's touch on diversification. This is an investment strategy that involves spreading your investments across various assets to reduce risk. Think of it as not putting all your eggs in one basket. Instead, you're spreading your eggs across several baskets, each with different levels of risk and return. This can help ensure that a decline in one particular investment won't wipe out your entire portfolio. So, as we've seen, making the right investment choice is a delicate balancing act of understanding your financial goals, assessing your risk tolerance, considering your time horizon, and diversifying your portfolio. And while it may seem daunting, remember that this is your journey, and every step you take is a step towards financial independence. Remember, the goal is not just to make money but also to preserve and grow your wealth. So, is your money really safe in the bank? Well, it depends on how you define safe. Now let's take a moment to highlight the key points we've discussed in this video. We've seen that while banks may offer a sense of security, the reality is that the returns from bank savings are often outpaced by inflation. This means that your money is losing its purchasing power over time, even as it sits safely in your bank account. We've also explored the world beyond the bank, the world of investment. There are a myriad of options available, each with its own set of risks and rewards. Stocks, bonds, real estate, mutual funds, cryptocurrencies, these are just a few of the avenues you can explore to potentially increase your wealth. However, remember that investing is not a one-size-fits-all solution. What works for one person may not work for another. It's important to understand your financial goals, risk tolerance, and time horizon before diving into the investment pool. We've also underscored the importance of making informed decisions. Whether it's choosing a bank for your savings account or selecting an investment vehicle, knowledge is your most powerful tool. Take the time to educate yourself, do your own research, and if necessary, seek professional advice. And finally, remember that the purpose of this video is not to demonize banks or to blindly promote investment. Rather, it's to encourage you to think critically about where your money is going and how it can work best for you. In conclusion, the safety of your money isn't just about where it's stored, but also about how it's growing. Keeping your money in the bank may seem safe, but if it's not growing at a rate that outpaces inflation, then it's not really safe, is it? If you found this video helpful, don't forget to subscribe to the Investing Thoughts channel for more insights and advice. Thanks for watching.